So let's go $2,000 today day trading and using the most simplest strategy ever. So in this video, I'm gonna walk you through exactly how I did it from literally step one all the way down to like step zero, right? Just step zero, but you know what I mean. We're gonna go through the entire process and all the analysis as well. So first things first, right? Obviously I'm using the algorithm that I created, but before I get into that and like how it works and everything, we have to look at this on an even more basic level. And every single time I do my analysis, it's from a high time frame all the way to a low time frame. So right now we're looking at the 4 hour. And this is the USDJPY. Now I personally love trading USDJPY. Now I used to be the type of person who's like, oh, well, I don't know what the heck's going on in Japan. Why would I trade it? But the thing is you don't really have to know like everything that goes on in order to understand what's going on with the price on a technical level. I mean, you can see, right? This is the 4 hour. USDJPY just trends for a very, very long time when it moves. And it has a lot of these head and shoulder type patterns, right? You guys can see that there. So if we're looking at it most recently in this kind of area, it's a little choppy. So I've been a little bit extra cautious, but I'm still able in order to, be able to catch that. So first things first, I always draw my supply and demand zones because when I think about this, you need to think about it in terms of buyers and sellers, right? Every single time I trade, I preach this. You have to think of the market like an auction theory. So first of all, before we even get into that, I want to go on an even more basic level in explaining to you how the heck this like whole trading thing works and why, if you're not seeing success in trading, this is probably why. This is it right here, right? We need to think about trading in terms of not like a bunch of squiggly lines and candlesticks, but really fundamentally what it is. So I'm going to put it in an analogy for you. We have a car, right? I love to use this car example. Okay, and this car is trading on the high price at $30,000 and at the low price, $20,000. Now there are instances when the price of the car will trade for higher. For example, let's say it's like the most clean spec that you could get. It's going to trade at a premium. There's higher demand for it. Now let's say, we get a lower demand, and we have this car, right? This car is selling for these types of prices. Now, as soon as you would see the price of the car come either here or here, then what we're going to try and do is find a price to where we can get it close to the equilibrium, okay? Because if I were to buy this car, or if I were to short this car, which, theoretically you can't do, but with the markets you can, then I'm looking in order to find a reversion to the mean or the equilibrium. Now, this is a linear model, right? And a linear model means that it's either going straight up, straight down, and it's trading within a certain bounds, right? And the markets are not linear, right? They go up, they go down, up, down, and it's just impossible, right? But the thing is conceptually, what can we use on this chart that's linear? I'll give you a little hint. It's right here. It's the relative strength. I love using the relative strength, and I have this little, upgraded, beefed up version of it to where I can see the, the oversold and overbought levels. But typically, if you don't have that, that's fine. This is part of my algorithm. All you need to do is just look for, the support and resistance, right? It's literally the same exact thing. When you see those little points in there, then you can identify that the price is overbought or oversold. So finding that gap, right? Bridging the gap. That is literally the number one way that like everyone says, okay, this is how, you make profit. You bridge the gap for something, whether it's sales, whether it's marketing, whether it's a business, a solution. In trading, you're bridging the gap between finding an asset that's undervalued, overvalued, and then getting it back to the mean reversion, like the actual equilibrium price, the balance. So that's essentially what we're doing here. That's the basis of trading. I don't care what anyone says, fair value gap this, inverse that, freaking nuts and balls strategy this. I don't care what they say. The number one thing that you're doing is literally just trying to find a reversion of a mispriced asset back to the mean, right? Or basically just trying to keep in track with the trend. Because the thing is, we did it flat. Now that's for the RSI, but for the actual price, it can be like this, right? We can get buys right here. Oh, it's too much in the trend and it goes back down, or oh, it's too low in the trend and it goes back up. So you have to think about it like that, right? It's not a linear channel. So anyways, first things first, if we're looking at it in terms of that, we can see that we have all these grabs, right? And what a grab is when the price comes down to this certain level and it bounces, right? We can see it bounced here, it bounced there, and it bounced there again. So how do I take advantage of those bounces, right? It's just something that I need to keep in mind, right? And I had a short position on this. That doesn't matter because this is a 4-hour time frame. Now you have to keep in mind that when the higher time frames, right, are showing something big, so for example, like this, it's going to be way more respected than like a 1 minute time frame. If someone's like, oh, well, why did my fair value gap, or oh, why did my zone get invalidated on the 1 minute? Well, it's because you were in a bigger condition in the 4-hour or in the daily, right? Those are the ones that really, really matter. So I always start with a 4-hour. What the heck is going on in the 4-hour? I see the buyers here. I see the zone is right here. Everything is looking good. But my algorithm is telling me that we're in a downtrend, and I can visibly see that we are in a downtrend, right? I'm not using this as like a support or like a trend line. I'm using this to illustrate that the price is clearly following this slope or this delta, right? Delta is the change over time. Now, if I see that we're going down, okay, then that's just something to keep in mind. All right, I mean, I'm not going to overcomplicate it. I have buyers right here. I have this supply zone, or excuse me, this demand zone. Let's go ahead and go look at it on the 15-minute. Okay, perfect. It looks like there's a couple of instances here where I want to be selling. In this downtrend, every single time I get these little spikes, these look like good instances to sell. And if we look on the actual RSI, we can see that, okay, this was an overbought condition. This was somewhat overbought right here. This was overbought, and this was overbought, and this was overbought. You can start to understand, okay, well, when we have these trends, we get these little spikes. That makes it a lot easier. Now, however, when we have something like this, it's just not a whole lot, right? There's not a ton there. But when we have something like this is even better. This is perfect, right? This is a textbook setup. You can see this was clearly overbought, clear as day. So of course, it's a stable pair. It's USDJPY. This doesn't like move out of the ordinary like some crypto shitcoin. You know what I mean? But there's a problem. The spikes are good. Consolidation is bad. You can see this, right? Like this, we have this spike and comes back up. And as soon as I see that, I'm out of the trade. I want to stay away from this. I'm looking for spikes only. And that is the basis of my strategy. Is a spike, a liquidity spike, and that means it's mispriced. There can be spikes like this, and then they keep staying up, which means that there's a breakout happening, okay? There's a very big difference between a spike and a reverting back to the mean and a breakout. And the sooner that you can understand and start to differentiate what are breakouts and what are those spikes is when you'll become a better trader. So anyways, I see that, we've been in this zone. We bounced off of it. We came back up. And we're coming slightly closer to this zone. So where did I take this trade? Well, if I'm looking at this, right, I took this trade and just looking at it, right, without the algorithm, I took this trade right here. And the reason why is because, first of all, it was during prime time USDJPY hours, which is in the evening. I saw this happen, right? The RSI came above right here. And you can immediately see when it came above, we priced in this, okay? We priced in these wicks, okay? And the candlesticks, they actually are important, okay? Like the actual bodies of the candlesticks are important. And because candlesticks can illustrate delta, which is change over time. Now, change over time and what delta means is basically the entire momentum. Candlesticks can illustrate momentum. And when I see something like this where I have a wick right here, a wick right there, and another one right there, that's telling me, and even right here, that's telling me that we're having some resistance. There's less buyers right there. So we can see that, okay, the price is getting beat down, right, by like a bat, like it's beating it down. And it's consolidating right here. And even when we get this bullish engulfing candle, it still makes a wick and then boom. So instantly right off the bat, I see this, right? Okay, this is to me is looking like, an instance, and I'm like on the replay chart, an instance to where I'm like, okay, this looks like something that I definitely want to be taking a part of, all right? Because look, we're already, above the zone. We've been in this downtrend for a while. But am I going to bet on it making a lower low? This is what we need to talk about right here. Where do I put my stop loss and take profit? So I always put my stop loss like a little bit above, right? Maybe even a little more like this. And then I'll put my take profit at the equilibrium, okay? At the equilibrium. I cannot stress that enough. When I set my take profit, I set it at the equilibrium. Now, I'm not going to be targeting a new low, okay? Right? I don't want to be targeting a new low. Why? Oh, why wouldn't I target a new low? Because this was the low and it bounced and it exploded. So all I'm going to do is look for that quick reversion to the mean somewhere around here, because I can see this is the perfect area, right? This is the middle. This is the equilibrium. This is what I talked about with the entire linear strategy, all right? So look what happens, okay? It is clear as day what happens. And we can see, I want to make this like, pretty slow, so that way we can watch it carefully. But look exactly what happens. Ready? Okay, so we can see that, right? We get a little bit of consolidation here. I'm watching this happen. Okay, this is good. We priced in a couple of these, and then my algorithm as well, right? It gave me the sell signal. I don't really know why it's not showing it right there. But this is exactly where the algorithm gives me the sell signal, like right around here. So I'm in this position, like right here, right? Like probably right there. So automatically you can see that I'm targeting, and this was about a 1-to-1 risk to reward trade. Right here and right here. It's like, it says this a little more, but I believe it was like, might have had my stop loss a little higher. It was about a 1-to-1 risk to reward. Let's just say for the sake, you're like this, right? 1-to-1, 1 to 1.25, whatever. This is where we're at, okay, for the trade. Now, when we go in and press play, right, we can see that. Okay, that happens right there. Now, a lot of traders right here would see this and freak out. Be like, okay, it's over. I lost. I'm still in the trade. I have my stop loss right here. I'm not deviating from it. This can happen. The price can be retested many times before it actually goes down. All right, we're still watching it. Oh, boom, that candle right there. As soon as I saw this candle, I remember watching this trade. As soon as I saw that break of this structure right here, as soon as it broke down, I was like, it's a done deal. I knew I was going to come down and at least come close to my take profit. All right, because it broke the structure. It's going to it's going to tap into the equilibrium to see if there's more to it, right? Is there more buyers in this level? Because it's an auction process at the end of the day. You have to understand that. As soon as you understand this is an auction, you're going to become better at trading. So it comes down, right? Comes back up, tries and fails. It tries and fails. Again, it tries and retests it. Boom, fails. It's like boom at that point, and it's over. At this point, I'm sleeping. You know what I mean? I have my take profit set, and then boom, it comes in, smashes the TP, and then it's over. But look at this very, very closely, okay? You see and you notice, we come into the equilibrium price, okay? I'm not targeting this crazy risk to reward ratio where I'm like, oh, I'm going to put my stop loss right here, and then go all the way down here for this 4-to-1 risk to reward ratio. Like, no, dude, no. I see too many people trying to do like, oh, I'm doing a 10-to-1 risk to reward ratio. Okay, if you do a 10-to-1 risk to reward ratio, you're going to lose so many times, okay? And you're going to get discouraged. And by the time you actually get that one banger that you're hoping for, you're probably going to end up closing it and getting emotional anyways. But if I have a 1-to-1 risk to reward ratio or a 1 to 1.5, and I'm winning 60 or 70% of the time, I'm happy with those numbers, right? Even 70% of the time, like that's even better. So look what happens, okay? We come here, retest, boom. Yep, the trade's over, right? If you saw this and you didn't hit the take profit, you should have closed it for break even, because we saw a really strong support, started to bounce. You should have closed it right here, okay? So I had already hit my take profit. We're good to go. And then look exactly what happens. It smashes the stop loss and keeps going. That's just how it works. There's buyers and sellers in the market, and as soon as you understand how this actually moves and why it moves, and the other person on the other side of the keyboard, is when you start to understand it, and it's like, oh, I understand it now. Well, yeah, because you know how it works. It's not some like crystal ball or like some magical thing that like is with trading. It's literally just understanding what moves the markets. People trading. So if I go ahead and exit out of the replay mode, you guys will see, right? And this trade was like beautiful. I'm very, very happy it played out this way. And you can take these same exact setups. Excuse me. You can take these same exact setups, but it becomes a lot better, in my opinion, when you have something like this that tells you where the setups are. Now, this one, I don't want to take that one. This one, I don't want to take that one either, because I already went into this one. The trend is flipping over, right? It's going into a buying trend. And, you know, this one already hit. So I'm not hitting these two because they're just continuation of the trend. But this one is, in my opinion, a good one because we came into the zone in the entire thesis and analysis I just told you. So it tells me exactly when to do it right here. Boom. As soon as I hit it, done deal. Anything after that, I'm going to wait 1 or 2 more days. Let's, reevaluate the trend and then hop in on that one. So there is some intuition that comes into it. You have to be able to analyze this and, map it out and understand how it works. But it's a lot better, in my opinion, when you have this already mapped out. Because another thing is like, well, this happened at like 8, right? 8 or 9 my time, PM. So if I'm able to get an alert on my phone and just go in and lock it in, it just makes it 100 times better. So if you want access to this algorithm, click the link in my bio. I'll be able to, see if we can walk you through getting on it. And then also working with me one-on-one, right? Like if you like what I had to say for the analysis, all that stuff, I do this literally every single day live. I live trade every single day. So that's going to be it. I'll see you guys in the next video. I mean, here's the thing. Like if you're struggling as a trader, you're trying to make it, you're trying to fix it, keep watching videos, right? Like keep understanding, keep learning, right? Because the more you learn and the more, different perspectives you get, you'll start to develop your own. But the only way for you to develop the best perspective that you can is by having seat time and trading time. So you need to sit down, you need to actually trade and get it going, right? That seat and practice time is the most important thing. So if you like this video, leave a thumbs up, subscribe, and I'll see you in the next one.